Electric Guitar has switched from the standard list of the London Stock Exchange to AIM after the reverse takeover of 3 Radical. I'm delighted to be joined by Electric Guitar's founder and chief executive, John Regan. So, John, what was it about 3 Radical that was so attractive?
Well, the thing about 3 Radical, I think we probably need to go back a little bit. The purpose of electric guitar, the reason that electric guitar exists is because there's a structural change in the digital advertising marketplace. And that change is being driven by privacy. And I think we're going to talk about first-party data and third-party data in a minute, so I won't go into too much detail there. But fundamentally, what is happening is that because of a combination of privacy legislation, changing consumer attitudes, we're all now aware of things like data harvesting and cookies and things like that. But also, most importantly, the behavior of the technology companies like Apple and Google and Microsoft and Facebook, those guys, the guys who provide a lot of the data that powers the advertising marketplace. Because of their behavior, the market is changing, because what they are doing, because of these two things, because of privacy and consumer attitudes, is they're saying, we're going to put some walls up. We're going to limit the amount of data that we're prepared to share with advertisers when they do their advertising. And the result of that is that those companies now understand more about those advertisers' customers than the advertisers do themselves. So if you're an advertiser, you're concerned about that. It limits your ability to develop new products, to optimize your marketing, to do lots of different things. It makes that data that has powered your advertising much harder to get your hands on. And so what that has meant is a change in the way people think. In the past, that data was fairly ubiquitous, very, very cheap to access. So when you were marketing, you talked about targeting, but actually you were throwing a lot of mud at the wall to see what sticked. And that's why, the quality of the advertising you see is often not that well targeted, although there is data behind it. Now, that's the bit that's changing, because now, with the data less available, what advertisers want to do is understand more about customers by keeping them on the website that they've been directed to and asking them more so that they can improve the experience that people have on that website. They can improve the relevance of the products which people are shown on the website, the pricing, the way it's delivered, and all of those things to make it more attractive to people so that they come back. Because in the past, the way you got them back was you chucked that mud at the wall. Now you want people to have a really good experience and think, I liked the way that worked. I'm going to go back to that specific brand and use them again. So the summary of that is, in the old days, you used to make people want things with glamorous images and the things that look really fun, and you showed them that over and over again. Now advertisers are trying to make things people want as opposed to making people want things. So that's the big change. The reason that is relevant is because, as a result of that, advertisers are trying to collect what is called first-party data. You can ask me about it in a minute. And 3 Radical are experts in collecting that first-party data. So as this changes, and it's changing really rapidly now this year, as this changes, companies like 3 Radical are in higher and higher demand. And because of the history of the ecosystem, there's not that many people around at the moment doing that. So it's really attractive because it's right in the right place at the right time. There's going to be a land grab for first-party data over the next 18 months. So they're perfectly positioned to do that. Okay. But it's not just that. There are two other things that are really key about 3 Radical. The other one is, this is a launch platform for electric guitar. It's a buy and build business. And actually, we've been really, really lucky there, because 3 Radical has got feet on the ground in APAC, in Singapore, and clients around that APAC region. It's also got feet on the ground in the US and US clients, as well as in the UK. So we're buying into a global business, which is a launch pad for us, which is excellent. And the third thing is, actually, they've been going through the kind of standard development tech cycle where they've developed really strong and robust tech, won some really, really strong clients as a result of that. People like, as a global payments provider, which I'm not allowed to name, but there's not many of those around, who did a really stringent test of that infrastructure and bought into it. The biggest bank in Singapore, there are big brands like NSPCC and Kaiserwealth all using this platform, and they're using it above everyone else's because it's well developed and robust. But what 3 Radical haven't done is really push aggressively sales and marketing. So there's great potential in there. They're just at the point where they need to start doing that now. And that's the other really big opportunity for electric guitar.
Okay, so that's an awful lot of pluses, but the price for 3 Radicals seems a steal. How did you persuade them to sell at just over $1 million?
Well, I mean, this is again the opportunity that we have as Electric Guitar. We're at a point in the economic cycle where businesses have had to switch away from their original plan in a lot of cases, and the original plan was let's go for rapid growth, not necessarily profit. And what that has meant, as this switch has happened, businesses are finding it hard to raise investment at the high valuations that they were before, based on the potential that they had. So those valuations have dropped. Obviously, that's not good news for founders who have high aspirations for those businesses. But what we are able to offer by offering them paper in Electric Guitar in the public company is a second bite of the cherry, particularly at this stage in Electric Guitar where we're starting off and everything else. We know that we work together, we'll contribute to the value of the businesses, and as the value of that business grows, then everyone benefits because they're shareholders and we're shareholders. And the other thing that we're able to do, of course, because we're a public company, is we have access to the public markets to raise investment capital as well. So that's what we've done with 3 Radical. It's a paper exchange for the value of that business, and a very low one. And bear in mind that they've invested £8 million in developing that technology, and in total, the business has cost £12 million to develop it to the point where it is now. So £12 million worth of investment overall. And you're right, for us, our price of roughly 1.28 million to buy that business is a really competitive price, really attractive.
So therefore, is Electric Guitar focused on rapid growth compared to profit then at this stage within the business cycle?
No, the intention is to invest significantly in sales and marketing. We're bringing in a sales team. We're ramping up the marketing as well, because what we need to do is grow 3 Radical to profit as quickly as possible. That was the whole premise of the investment round we did, and that's what we described to our investors who came in, is how we can take this business and really grow it very rapidly. I mean, I can't say it too many times. This is a real land grab year for the products and services that they've got. So we need to invest in making that land grab.
I'm just wondering how much influence you'll have over 3 Radical's direction, or, with this being your first acquisition, is it more of a joint venture, or have you given them sort of full independence?
No, I mean, it has been very convenient. Let's say that the strategy which they have, which is to develop this first party data offering, is exactly aligned with what Electric Guitar was set up to do. It's a perfect fit from that point of view. Not only that, actually, I've known the founder of 3 Radical, David Eldridge, for about 30 years now. So we are very aligned in the way that we think. We've had 2 or 3 businesses that we've run together in parallel. So actually, it's not a massive shift in the way they're thinking. However, what we do intend to do, again, as part of the Electric Guitar strategy, is bring in complementary technology through our future acquisitions. So if you look at where we are right now, we've got that global footprint already, which is great. That means when we bring in other acquisitions, first of all, for those acquisitions, then they've got the immediate advantage of access to other markets. But also what we can do is give 3 Radical access to different verticals, give access to complementary technology and more skill sets and a bigger pool of talent. So it fits really, really nicely.
So you've given me a couple of prompts already. What is the difference between first party and third party data?
I find the simplest way to describe it is if you think about going to visit a tailor. So if you go to visit a tailor, you give your measurements, and in exchange for that, it's very, very clear what you get back. You get clothes which fit as a result. So that's a really transparent relationship. You know the data that you're giving up, and you get value from that because your clothes fit. So that is first party data. The third party data equivalent of that type of relationship would be if the tailor snuck into your house and went through your cupboards and took your measurements and then turned up at your door and said, "I've made a suit that fits, would you like one?" without you even asking for a suit. That would be third party data. Now that third party data, that's what is happening. That's what's been powering advertising on the internet for the last 10 or 15 years. And it comes from these little bits of code that sit in your browser called cookies that just in the background monitor your browsing activity. So you don't really know the extent of the data that's being collected. We all give permission to do it. We have those little cookie boxes that we tick yes, but that never really explains the extent and amount of data or what can be done with it either to do that. So it's a very sort of shady type of relationship, and that data gets resold by people like Facebook and by people like Google to advertisers. So they make an awful lot of money from doing that. That's the bit that's stopping now. That's what's changing.
But your website has cookies, so I'm just wondering, how will that impact your business? Are you going to change your own cookie policy?
We will change the cookie policy in line with the legislation as it changes and in line with the advice that we've got. We are not using cookies in for advertising. Our cookies are used to optimize our website, but actually we're not using it for advertising. Our position on all of this is that so long as permission is transparent and clear and people understand what they're agreeing to, that's okay. If the situation is so complex that that's very hard to follow, as it is with the current way cookies are used, well, then that's something that we believe the industry is moving away from. If you talk to chief marketing officers, the last survey that I saw, it's something like 60% of them said that they want to focus on first-party data this year. I would argue the other 40% just haven't quite woken up and smelt the coffee yet, but it's a real focus for them, and that is for three big reasons actually. The first one, of course, is the legislation, but the second one is the consumer opinion. For them, it's a bit like playing Russian roulette. I mean, you may remember the Cambridge Analytica scandal, where Cambridge Analytica was caught influencing the election of Donald Trump and Brexit, allegedly, where they were scraping lots and lots of data from Facebook, and there was a huge scandal amongst that. Now, actually, from a legal perspective, they didn't do very much wrong. They didn't breach any rules, but they really did get caught out. And if you are a big brand who's invested billions, literally billions, in building up that brand reputation, you really do not want to be on the wrong side of one of those scandals. So it's a bit like playing Russian roulette if you're CMO now, because consumer opinion is increasingly strong in that area. So those are the two reasons. The third reason we haven't really touched on yet, actually, is AI. We've probably all seen ChatGPT. If you've fiddled around with ChatGPT, what you learn, it's incredibly clever in the way you can have a conversation with it. But if you try and do something too specific, something where you have expertise or you need a very specific use case, it tends to get less effective. And that's because it's a generalist. It doesn't have the right data to power what you really, really need. And it's the same for brands. So if you don't have the right data, you can't create a chatbot, for example, that will talk to someone in a knowledgeable and useful way about trainers or something like that. You need the right data. Now, the challenge is if you don't collect first-party data, the only place you can go to for that data is the big advertisers, people like Facebook and Google and all those guys. And therefore, what that means is your risk is those big advertising data collectors are going to be controlling the conversation that you're having with your consumers. So not only do they know more about them, they're now controlling what you say to them as well. So that's a really big exposure, which is why everyone is very focused on moving towards this new solution. So there are some legislative reasons, but there are also some very practical commercial reasons for this happening.
So how will you use AI to grow your business?
Well, one of the things which is really attractive about Three Radical, which we didn't touch on, is the fact that as a result of the technology they've built, what they have created is a big data pool of information, which is completely anonymous. So completely protected from GDPR, protects people's privacy. It's completely anonymous. But what they have done is understood how all the people who have been through their first-party data technology have engaged with it. And they've created what they call engagement points, over 1 billion engagement points. And that data set at the moment hasn't been exploited by Three Radical, but my background is machine learning and AI and data. The moment I saw that, I was really excited about it. And so one of the first things I did was get it due diligence and talk to a tech partner about it. And we know that that is a really, really good basis for training machine learning to create algorithms which should be able to, at a really early stage, as people enter a website, from very early stages in the behavior, work out what the website should do next or what the Three Radical technology should do next to improve their experience, to keep them engaged. So that's a really exciting opportunity. That's what we are beginning to do with AI now. That process has already started, and we're really excited to see what's in that 1 billion records.
I just want to go back to the listing, because prior to the acquisition, which was a reverse takeover, you were a main board listed company. So what are the benefits of an AIM listing for Electric Guitar and its portfolio?
Well, there are three reasons actually that we wanted to come across to AIM. Firstly, the way in which AIM is regulated is much more suitable to a fast-growing tech business like us. We're able to do things in a much more flexible way. But the second thing is also people look to AIM for exciting businesses. And so analysts are constantly looking at AIM companies. We want to be researched and analysed. We want investors to know what we're doing. We want them to share in our journey and the excitement and potential that we've got in there. And the third one, of course, is AIM attracts the type of investors that invest in our type of business. We're a fast-growing tech business, and so that's the right place for us to be.
So how would you describe your business now? Has the SPAC or special purpose acquisition company label now been retired?
Yes, it has. And I'm very, very pleased about that, because it means I'm back into my comfort zone of running businesses, growing them, scaling them, making them work. We're a trading business with a sales operation, with a product, with clients.
So remind me about how much money was raised at the listing and how you're going to allocate and use the capital.
Okay, so in the listing, as I mentioned at the beginning, this was a paper transaction for the value of 3 Radical. We valued 3 Radical at £1.28 million. We valued the SPAC at the valuation it had when we suspended our shares, so at the valuation of 2.1p, which means that we were just below what were we, about 2.2 million. So the pre-money value of the business was 2.5, and then we've raised another 2.2 million pounds. So that takes us to 4.7 million at the point where we listed.
I am interested in what else you're looking at in terms of acquisitions. You know, what type of businesses, where are they located? Because 3 Radical, as you said, is APAC, not domiciled, but has a presence there.
Yeah, I mean, look, the answer to your question is we spend a very long time in a bit of a beauty parade, really, to identify our first acquisition, and so have talked to a lot of other businesses. The challenge that we've had is we didn't want those conversations to go too far, because if we got to the point where there was any kind of letter of intent or discussion about value, we would have had to include those in the prospectus for the current raise. And we wanted to keep that process as simple as possible. So actually, we've got quite a nice long pipeline of businesses which we're now able to go back to and talk about what next. And it's a huge variety. Obviously, machine learning and AI is important. That's going to really transform the advertising industry over the next 18 months or so. So we've got conversations going about that. There is one business in particular which is established across the UK and EMEA in a particular vertical, but they're nowhere in the US and APAC. So there's some really obvious gains if we're able to acquire that business as well and bring that in. So the common thread amongst all of these businesses is that they deal with first-party data, and they provide services to advertisers to help them collect that, to help them monetize it, to help them benefit from the use of that first-party data, provide the expertise to give them the data they now really need in an environment where that expertise is actually quite rare. And that's the common thread amongst everything that we're looking at.
Is it a buyer's market, though? I'm just wondering, are you in the same hunting ground as competitors, including Brain Labs, which call themselves the smartest digital marketing agency in the world?
I think we are, and we're not. I like to say that the difference between us and some of the other companies that people make comparisons to is that we are starting with the data and moving towards how, learning from what that data teaches us to tell us how advertising should be deployed, and to teach us how products, to teach our clients how they should change customer experiences. Most of those other businesses that you've talked about, and it's not just Brain Labs, is it? It's Brand Tech and S4 Capital and various others. Most of those other businesses, they've actually started with the traditional advertising model, that began with newspaper adverts and big posters and that type of thing, and creative, where it was all about the creative, which has become more and more tech enabled with media planning and optimization. They've actually started with that old process and used tech to try and optimize the old process, the legacy process. And what we're doing is saying, no, in the new market, in the new world, it's about the data. It's about understanding the data to understand consumers, to give people that one-to-one experience which they now expect. So that's the difference between us, which means that actually there are businesses which will be attractive to us and our strategy, which will not be attractive to people like Brain Labs. So I'm sure there will be some overlap, and that will be interesting to see in the marketplace. But I think where we are at the moment, we're in a slightly different area, because we're going from data to technology to advertising, as opposed to the other way around.
So does electric guitar have the ability to become a unicorn?
Of course it does. Yes. Um, Technology is, I mean, look, data has been called the new oil. I like to say, actually, the person who said that said it a little bit early. But now we are at the point. I mean, you know, you'll be, anyone looking at AIM will be familiar. There's a lot of resources companies which have listed on AIM, and they all talk about the things that they're going to mine. And data actually is very, very similar there, in that we're looking at this data pool of 1 billion events, and I know that there are some nuggets in there, and we're going to drill for those nuggets and find those nuggets, because this is the new oil. If we find, you know, the best, the purest gold, that would be hugely valuable to the biggest brands in the world, and that would be where we'd really had struck oil, if you like. And so, yes, all the businesses that we look at as targets are all generating data. Most of them are using technology and not really exploiting the data. Well, we have expertise in exploiting that data, and so there is the benefit that we will hopefully, you know, strike a lot of oil. And if we can find something which is valuable to the biggest brands in the world, well, then yes, we have every chance of becoming a unicorn.
So John, investors follow the money. So how would you describe your current cash flow and profitability forecasts?
Well, it was necessary and the right thing to do, to base the current raise on the current business, not on our future, because we couldn't talk about our future. We had the strategy there in the background, but actually, Three Radical itself as a standalone has to work with the money that we've raised, and that's what we forecast. We know that we can bring that business to profitability quite rapidly. We're investing very aggressively, over £500,000 going into sales and marketing right now. New sales team coming in, new marketing, and a cultural shift for that business, where we are looking much more at, okay, what does the client need? How do we deliver this efficiently to the client? How do we get a nice pipeline of clients going in? So we know that within, if we did nothing else, and it's not the plan at all to do something else, to do nothing else. In fact, there's, you know, a healthy pipeline of businesses to acquire. But if we did nothing else, we've got a plan that takes that business to profitability over the next 18 months.
So finally, it's your fifth business. There might be more that I'm not aware of, but I'm aware of 5 businesses. This is your fifth business. Will it be your swan song? I'm just thinking about the exit strategy that you've mind mapped.
Well, I'm not sure about Swan Song. I can't see myself stopping. I'm really enjoying this. I really enjoy innovating, finding new businesses, making them successful. So I can't really see an end to it. It might be the last business I do, but I could be doing it when I'm 75 if they'll still have me. So, I'm not really thinking about an exit. I'm thinking about, this is something which is really enjoyable, really good fun, and something which I hope will keep me going for a long time.
John Regan, Chief Executive of Electric Guitar. Thank you very much indeed.
Thank you.